Good afternoon, everybody, and welcome to this week's macroeconomics analysis session for October the 23rd, 2015. DMAC with you and sitting alongside me as usual, Jeff Saffer, head of EIC. Welcome, Jeff.
Thank you, Dave. Hello, everyone.
Hope everyone's having a good week. The disclaimer, first and foremost, the content of today's presentation or any other Elite Wealth Club material does not constitute a recommendation, nor does it take into account your investment objectives, your financial situation or particular needs. So before making an investing decision based on the general advice presented in any of our presentations, please consider whether that advice is appropriate in light of your financial circumstances. The week in review, Jeff, last Tuesday, monetary policy meeting minutes, so a bit of a review on there, and probably the big one on this, as far as I could work out, Jeff, is just some data coming out of China.
That's right. Look, it wasn't a hugely eventful week in the global economics front. As you mentioned, in Australia we had our meeting minutes, so all the detail behind the RBA's decision a few weeks ago to keep rates on hold. Look, there was really not a lot in there, and I think I mentioned last week, don't expect anything. If I had to pick out what I could, the RBA certainly noted that the jobs market has been holding up much better than they expected. Not a new comment, but they did mention it. And also, they've been talking about risks in the property market for a while.
Yep.
And they said some of the regulations that have been brought in about banks restricting how much they lend to investors in particular, starting to have a little bit of an impact.
Mm-hmm.
So really, nothing. Look, no groundbreaking changes there. But what was interesting is there was nothing in the statement to suggest that they're going to cut rates.
Yep.
It was very neutral.
Yep.
And beforehand, the chance of a rate cut next month had gotten up to about 40%.
Mm-hmm.
It's now sitting at 20%.
Right.
So I have been saying for a few months, since May, basically, I didn't think the RBA would do anything for a while. CPI would come out. They might act in November. It now looks unlikely.
Yep. Okay.
So no more rate cuts for the moment from the RBA.
Okay, so that's probably in line with what's happening in the US at the same time.
That's right.
Just
So
being pushed back further.
yeah, it's look. I mean, in the US, obviously, the next move is going to be higher. I think in Australia, it's quite possible. It looks like the next move will be lower, but and those two look pretty likely. But like you said, just both being pushed out.
Further down. Yep.
I might just skip over to Canada actually for a minute.
Sure.
They kept their rates on hold.
Mm-hmm.
They've cut a couple of times this year. There was nothing in there to suggest that there's going to be another rate cut sort of imminent, but they did downgrade the Bank of Canada downgraded their outlook for the economy.
Yep.
It's very similar to Australia,
Yep.
and that's why I want to sort of link them a bit together. Obviously, Canada's very much commodities, energy, more so energy rather than mining. Their economy is based on that. So if you can think of what we're going through in Australia with the iron ore and mining slowdown, very similar in Canada with the energy sector. And they just got a new Prime Minister this week as well. And obviously the economy is slowing, so that's going to be one to watch.
Yep.
Again, nothing specifically is going to happen right away, but certainly I think you'll see some big developments in there over the next 6 months.
Sure.
The other thing you did mention, obviously, in China, look, nothing, again, huge. GDP fell from 7% to 6.9%.
Yep.
It's the second time it's been below 7% since the turn of the century, and only it's only ever been under there once by a little bit in basically the middle of the GFC. So, we all know Chinese GDP is slowing. It was expected to fall from 7 to 6.8, fell to 6.9, so a little bit better than expected. Conveniently, I think 3 out of the last 4 or 4 out of the last 5 in China, GDP figures have come out slightly better than expected.
Conveniently.
Very convenient. And what's interesting is that it takes, most countries, 4 to 6 weeks to come up with GDP figures. China can very conveniently put them together in a couple of weeks.
Yep.
So either they are very efficient or
something else.
Or something else. Their process for coming up with the number is not as comprehensive.
Right.
But, you know, there's always been talk that the figures have been manipulated. So, unless the number is completely out of line, we don't pay huge attention to it.
Yeah.
That's been the week. So, again, no massive massive changes. Rates on hold. I'm probably going to stay on hold in Aussie for the moment. Ultimately, you're probably going to have to fall. Ultimately, you'll probably be cut again in Canada, and Chinese data didn't really change the picture.
Yep. Industrial production, that's down on the previous period.
Yes.
Was that surprising, or is that sort of something that is going to be a general trend that we're going to have industrial production sort of being weaker than the norm in China? Or?
Yeah, well, look, industrial production and fixed asset investment have both been in a multi-year slump, and not quite every month, but if you smoothed out the month to month, it would just be almost like a 45-degree line, a downtrend, basically, is what I'm trying to say.
Yep.
And these two numbers were actually quite disappointing. So, the GDP, maybe good news, kind of covered over that a little bit.
Yep.
But I look at the industrial production, fixed asset investment every month. Again, it comes down most months. A few months ago, we did get both of them popping higher and stabilising, so we got some good signs, and that now looks like it's all just gone away.
Yep. Okay. All right. Thanks for that. Well, let's go through and have a little bit of a look at the markets, just to recap what's happened over the course of the last several weeks, several months along the way. Again, just continuing to reiterate that we are still at this point in time in very high market risk. Our stochastic sitting between pretty much smack bang between 20 and 40 at this point in time. The Australian market, since breaking its longer term moving average, has really struggled to maintain or get any directional movement towards the upside. If we compare this with the US markets, there you'll see that as soon as we've fallen below our longer term moving average in the US, even though we've had some fairly significant moves upwards and downwards, we're back up right at this point in line with that longer term moving average. Now, important to note that longer term moving average has now moved towards the downward side. Obviously, the recent price moves, etc., just dragging that longer term moving average down. It's going to be really interesting to see whether we can, over the course of the next couple of weeks, get a meaningful break above this longer term moving average. I've highlighted here still a very dominant candle, which was the one that basically broke us out of this sideways moving channel. We're yet to challenge that candle, so that's still the dominant one, and in Japanese candlestick terms, until we get up there and pierce the middle part of that candle, that still remains the dominant one. And I think that it does certainly have some significance in this particular market. It's the candle that, or the straw that broke the camel's back, so to speak. We're coming back to retest that. We really do need to move up and close above that level to give the market some clear direction, Jeff.
Yeah, look, not only obviously is that important candle, as you mentioned, the US is just sitting around that moving average. That's the 200-day, is it? Yeah, so there's a lot of funds in America and around the globe that use that as a filter of getting in and out of the market. So, again, don't want to step on your toes on the technical side, but certainly from flow of money, if the market gets, sort of above that candle, or pierces the candle, gets above that moving average, I think there's a possibility of that sort of triggering a bit of a flood of buying.
Yeah. Particularly so because this fall was so quick that the opportunity to get out of existing positions, a lot of funds would have probably missed that. And again, if the whole market thought process or theme is that we're going to be heading into weaker times, then certainly the funds that didn't get out at this point will be looking for an opportunity to perhaps liquidate if we can't get meaningful buying at these levels. So it could well mean that we move sideways or to downward level. Certainly, if we get a nice solid break to the top of this, then it's probably reason for the market to rethink things and see what happens from there on. Certainly interesting. The last couple of weeks, our market risk has improved in the US. The volatility has dropped off below its longer term moving average, while still reasonably high. Again, the jury's out. We've just got to wait and see what happens. But certainly, on the way up for a bull market that we've had in the US for quite a number of years now. This longer term moving average has really acted as a dynamic level of support. Be interesting to see what happens now, whether that starts to act as a dynamic level of resistance going forward. We'll just go back into our slides and just see what we've got coming up for next week. Jeff, what do you make of news next week? The really important, I guess, sets of data that are going to be coming out and possibly having an impact on some of the global markets.
Yeah, look, again, not really a huge week ahead, but certainly some things to look out for. And in Australia, I always pay a lot of attention to CPI. It influences the RBA's thinking.
Yep.
And the RBA typically in the last few years has only raised or cut rates straight after a CPI reading. So if they're thinking about cutting rates, they wait until the CPI, the inflation data comes out, and they look at it and say, look, yeah, we can afford to do that.
Yep.
I think you'll see inflation come in something like 1.7% for the year, so it's still very low.
Yeah,
and the RBA has repeatedly said that inflation looks under control for the next 1 to 2 years. So I don't think this one will force them to act, but it'll be interesting nonetheless. We've also got, what's really interesting is for nerdy people like myself, certainly the mid-year economic fiscal outlook, the MIOFO, or however they like to abbreviate it to. It's basically like a half budget. You have your budget come out in May, and then they go towards the latter part of the year, about 6 months later, and they say, look, here's how things have. It's almost like a progress report. This is what we projected at the budget. Here's how we're tracking, and potentially here's anything we need to change in our assumptions. So, with a new look, they're not normally huge news. For the past few years, really, all it's been last sort of 4 or 5 years, it's been everything we predicted at the budget was too optimistic. Commodity prices have come down. We were expecting this bigger budget hole. It's now even bigger budget hole, which is pretty much the theme of the last few. You'll probably get that continuing. Where you might get a little bit of extra spice or flavour out of this one is we've got a new PM, we've got a new treasurer, and this is their first opportunity to stamp their mark on, and in particular in the last sort of 4 or 5 years, politics. A lot of it has been built around returning to surplus and managing deficits, etc. So the parties are going on a platform of economic management, and this is an opportunity for I guess Turnbull and Morrison to set the scene. They might come out with a really bad outlook, and of course you can blame that on the people that came before you, and then fast forward to next year's budget and they say, oh, we've done really well in the last 6 months. So it's a phenomenon that I follow with companies. When they announce a new CEO, the new CEO almost always comes out with some really bad news. You can blame it on the previous people, and the next year later you go, oh, look how good a job I've done in my first year or two. Now I deserve a big bonus.
It sounds a little bit like the Carlton Football Club.
Except that a year later there's no good news. But anyway, so there is the possibility that you'll get something like that. I mean, I think I don't think the new leadership is going to redefine economic policy right now. If they do, it'll be in next year's budget. But we'll start seeing the first few signs of even just the political side of the budget, I guess. Over in the UK, preliminary GDP has been sort of trending down in the last sort of 12 to 18 months. So I think you'll see that. I think that'll disappoint. In the US, core durable goods probably going to come out negative. I predicted that one last month. I think that'll probably happen again. The FOMC statement as well. Obviously, Fed funds rate not going to raise. All eyes are on December, and it's really looking increasingly like they're not going to do anything in December either. BOJ. I've been saying for a couple of months, really keep an eye on the BOJ. I think they will announce some stimulus. They had a meeting a couple of weeks ago, and they announced they gave away nothing. And I said, wait till the end of the month. That's when they have a major press conference.
Yep.
This is the first opportunity they'll have to, I guess, announce. It's probably too early, but an outside chance they could announce some stimulus, but probably still in a couple of months away.
Yep.
And in New Zealand, again, similar sort of situation to Australia and Canada, are obviously struggling from a commodities perspective.
Yep.
And there's downward pressure on rates over there as well.
Yeah. Okay. Again, largely a commodity-based economy, not oil or iron ore, but on the dairy and the agricultural side of things.
Correct. Yes.
Yeah. All right. Thanks for that, Jeff. Again, not a whole lot of news coming out next week, but in the meantime, hope you all have a pleasant weekend. I'll catch up with those of you in the Elite Traders Club on Monday morning for our usual 9 a.m. catch-up session for the weekly analysis. Until then, Jeff, you have a good weekend.
Thank you. You too, Dave.
And everybody else, bye for now.
Goodbye.